Welcome back. This is Chile Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. If you're new here, please click the subscribe button and click the notification to get my frequent video updates. So I hope everyone had a happy Labor Day off, and I hope you enjoyed your time with family and friends. The best part of life is spending it with friends you truly love and friends and family you truly love and trust. I am on earningswhisper.com, and this is just going to be some stocks to watch this week. We have GameStop to report on the 8th. So I believe that's Tuesday, 9/8 GameStop. The meme stock is going to report. Also, we have Lululemon to report on the 8th as well. Then we have Academy Sports to report on the 9th. That's Thursday. Coupa, which is a cloud stock, reports on 9/7. So that's tomorrow, Tuesday. And Affirm reports on the 8th as well. And Restoration Hardware. This is like a really cool hardware company, furniture store, and they have some good deals. Check them out. But we're only going to talk about 3 of them because we could spend all night on some of these stocks, but we're going to talk about Affirm, GameStop, and ZScalar. So those are the 3 stocks we're going to talk about tonight. And just look how they respond this week after earnings. So the first one we'll talk about is Affirm. Affirm is down the last 5 days. It did have a record peak about a week ago, hitting $99 or roughly $100 per share. This was when they partnership with Amazon. So the stock is off its normal range of $60, $70 per share up to the 90s due to the partnership with Amazon. So they are offering credit for people that purchase stuff on Amazon, and that partnership happened late August on a Friday, actually. So that's the deal on Affirm. So they will report this week. They have been down, like I said, over the last week, which is kind of good in a way if you're looking to get into the stock. See, Affirm reports on Thursday. Okay, so we have Thursday, they report. And like I said, they're off the highs of $100 per share. But something else I wanted to do was take a look at the technical chart on Affirm. And so you're going to see the disconnect of where the stock is. So this is the average line where the stock should be at $67 per share, and it's up here at $93 per share. So this thing literally, if they come out of earnings without a lot of good guidance for the next quarter, this thing will drop back easily to 60-something dollars per share. So just be mindful of that. This sign here on the RSI, the risk index, this is showing that the stock is oversold, overbought, and that anytime if you do want to buy a good stock, you want it to be right here at 50 RSI, not here at the 70 or above. So just to let you know, again, this stock could fall if they don't come out with good guidance on Thursday, the 9th. This stock will fall back to its mean of about $67, $70 per share. So that is Affirm. Again, this is the stock that provides credit for Amazon customers. The partnership was made official at the end of August. So realize there's some ways you may want to let this cool off some if you are looking to get involved with Affirm. Okay, so the next stock we'll talk about is GameStop. Everybody's heard of GameStop and heard about the February frenzy when the stock went from $32 per share up to $300 per share. That was when I got involved with GameStop for a very short time. For actually 2 weeks, I was a GameStop shareholder. So let's take a look at the stock. Let's see what its trading range has been. And you can see over the last 5 days, it's fell some. and it's trading between $200 and $215 per share. This 52-week high is irrelevant in this situation. But if you wanted to look at GameStop and say, hey, I'm looking to get a position, let's look at the technical analysis on this stock charts. Let's see. All right. So ideally, if you want to get into GameStop, it's not overbought. It's right at 58 RSI, but you would want to get it somewhere here at 180-ish. It looks like it's been able to hold a little bit right here at 180-ish. But again, GameStop is a stock that pretty much the company is deeply in debt, but they did just get some new leadership, and they're looking to do a lot of stuff online, even though they have a lot of debt, a lot of real estate out there, which, you know, people are shopping at some of the retail centers, but more or less a lot of gamers have moved online. So if GameStop comes out of earnings with a good strategy, there could be a bump in the stock. But just to let you know, the stock is, the company is deeply in debt. And of recent months, they've got a lot of new leadership. And of course, everybody knows, like, let's just look at the 1-year chart. As you can see, this stock last year, this time was trading about $13 per share. And then we got into January, and that's when it skyrocketed to about $300 per share. I was one of the people who got it at 39, and I sold it like right here at 300 per share. So obviously GameStop has a lot ways to fall. But if you're just going by technical analysis, as I said, you could see this stock fall back to 181, which if that's, you know, your ideal in the stock to gain entry point, and you really believe that the stock can go back to $300, that could be a play. But I would not risk much more money in the GameStop, in my opinion. But just keep your eye on it this week. GameStop will report. Let's see what else we got. ZScalar is another stock that is a great cloud stock. It says ZScalar is an American cloud-based information security company based out of San Jose, California. Has a market cap of 16 billion, and the company has more than 150 data centers. Now, Zscaler does have government contracts. That's where they got their big boost last year. This time, they were a really hot stock last year. This time, they jumped out of the, well, let's go back 2020. They jumped out of the mid, almost $100 per share, immediately into the $200, basically based off some contracts they had guaranteed with the government. It is a great stock, but right now, if you wanted to get involved with it, it is way overpriced. Just taking a look at the 52-week high, the 52-week high is 288 per share. And as you can see, it's sitting at 287. So definitely on Zscaler, you would want to wait for a pullback if you ever want to get involved with it. I'm not recommending it. There's so many other good choices in the market, but they have performed well over the last year. Just to show you what I was reading, investing.com, one stock to buy, one stock to dump. And this is, you know, from investing.com. And basically both of Coupon and Zscaler are both cloud stocks, but you can get some information on it. Says Zscaler provides automatic threat forensics and dynamics malware protection against any advanced cyber attacks of focus investors. So this is definitely good in the sense that they have protection for cyber threat, because that's been a big thing in the government of the last month or so, just talking about cybersecurity. Consensus calls for earnings per share of 9 cents earnings per share for the fourth quarter, which indicated growth of 80%. And revenue is forecast to jump 48% year over year from $1 to $186, benefiting from the strong growth of the Zero Trust Exchange platform, which lets organizations provide secure access to internet applications from remote locations. So it's not a bad stock. I just don't know if it can keep going higher at this point. So here's some analysis, stock to dump, Copang, the other cloud stock we have for this week. It looks like this article is saying definitely, yeah, this article is definitely saying stock to buy is ZScalar. Now, definitely, if you're going to get into this stock at this level, by it already being a $200 per share stock, you're going to have to wait a long time to see excessive gains such as 20%, 30%. A 20% move on this stock right now would still be like about 50 something dollars. So you're looking at 2 times 28, yeah, about $56. This stock would have to hit somewhere around $340. So I definitely would look for a pullback if you're interested in Zscaler, but it does show a lot of promise, but it's just way too expensive, I think, right now. So those were the 3 stocks we talked about. Affirm. Affirm is a great stock. They just partnership with Amazon. But you're going to have to wait for it also to cool off and just see how the stock responds. GameStop, I definitely wouldn't go into it. You could, possibly look into it, but there's way too many more opportunity stocks, a lot less priced at this price point, and this could, at some point go back to $100 per share. They've got a lot of debt on the books. I would not fool around with GameStop, but if you're a believer, hey, go for it. And the last one is Zscalar. We just talked about it. It's trading at 287 per share. And sure, if they come out of earnings with a good analysis, good guidance for the next quarter, this stock could jump 10%, 20, let's say 5%, hit $300. But again, the stock is well at its 52-week high. You're only going to get a small bump, maybe a $10, $15 bump. We'll see. But check out Zscalar. It is a buy, but it's only a buy on a pullback. So those were 3 stocks that I wanted to talk about that will report this week: GameStop, Affirm, and Zscalar. 3 stocks that will report this week: Zscalar on Thursday the 9th, and Affirm on Thursday the 9th, and GameStop, as we talked about. So I want to thank you for watching. Thank you for listening. Please like, share. If you enjoy the content, please leave a comment below. Also, if you want to start trading on the RobinHood platform, I do have the RobinHood link below, and where you can get a free share of stock. And if you already tried RobinHood, I have the Webull link as well. So thank you and have a good night.